Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So this is part 2 of the video that I released just a few minutes ago, and this video is basically we're looking at high growth companies using the same system, again seeking alpha quant system. So that's the one thing we're looking at. So we're looking at strong buys from that system, and then of course I'm going to share with you a bit more information about these companies, inshallah. Like I've always said to you guys, it takes a lot of time and effort to put these videos together, so I would genuinely appreciate if you can give the video a like, subscribe to the channel, let me know if you have any questions, and join us here. Join us on the Patreon account where you can get access to all of these things, including the Sharia compliant investing ebook. You get the discount and the Discord access, where a lot of brothers are sharing really good practices. They're sharing what they're buying, what they're selling, analysis of different stocks, and helping each other. And of course, I do contribute wherever I can, inshallah. So again, you get access to all these things as well. So if you're interested in that sort of thing, please join us, and inshallah, yeah, we'll see you there. So in the last video, I just touched on seeking alpha quant performance system, where if you invested $10,000 and in 2010, right now in 2024, basically in the last 14 years, you would have made $222,794 $, which is quite nice. And if you invested in the S&P 500, your total return would have been $177,288. And right now, that would have given you about 25%, basically total return per annum. So every single year, you would have made about 25%. And they talk about basically what they do. So anything that's a strong buy, what they're looking for is a strong collective value growth. Growth side of it, profitability of the business, EPS revision, and price momentum, and they put all of that into the system. And then any company that's basically giving us a strong buy then kind of outperforms the S&P 500. Basically, that's what they're trying to say. Again, of course, you're going to have to make sure that you're doing your own research, you understand the businesses, you look at it from Sharia compliance side of things, as well as understand the business model, inshallah. Right, let's have a look. So like I said, this is our high growth company. Some of them are profitable, some of them are not profitable. So you're going to have to do your own research, inshallah, as always. So the first company we're looking at today is DocuSign. This is one of the darlings of 2020, 2021 companies. I believe the price at one point we were looking at, I think it was over $300 per share at one point. So if I click maximum, let me see. Okay. There you go. So over $310 per share at one point. That was August of 2020, 30th of August 2021. Since then, it has been declining. Right now, we're looking about $61 per share. Now, that doesn't mean it's basically something wrong with the business. It just means, the bubble has burst in 2022. And for that reason, a lot of these companies has come down quite a bit. As you can see here, 2022 started, and then everything just went down from there onwards. Currently has a narrow, basically almost 13 billion market cap, narrow economic mode. This is probably one of the companies that other companies will acquire. By the way, their business model is very simple. All they do is allow you to sign documents, like legally binding documents, online. And I can see companies like Adobe, maybe Salesforce, maybe Microsoft, one of these companies will acquire this business at some point. So if you want to sign a document these days, you don't have to go to an office, you don't have to do all of that stuff. You can do it online, and then that's a legally binding document. So Nora economic mode price right now is $61 per share, EPS of 0.25, which is not bad. Okay, so they're profitable at least. PE is about 246 right now, forward PE 21. So that's probably why they're saying it's cheap. 1.29 in terms of PEG ratio. PEG ratio normally we're looking for below 1 is perfect, and in between 1 and 2 is not that bad. Price to sales more or less similar, 4.78. Profit margin non-existent, almost return on equity non-existent. Current ratio is important to us because we want to make sure if the company can take care of their current liabilities in the next 12 months. So anything 1 and above is what we're looking for. It's closer to 1, so it's okay. $751 million right now. Free cash flow, again, they have a positive free cash flow, which is quite good. Total return in the last 10 years, we're looking at about 8%. It's not even 10 years. I think it's 5 years for this company. And then growth estimate for the next year, I couldn't find this on Yahoo Finance. Next year, the next 5 years, though, they're expecting 20% growth every single year, which is quite nice. 24% discount right now according to Morningstar. So I'm going to give you Morningstar evaluations, and then I'm going to show you what Seeking Alpha is saying about the company. $74 per share is where they think the price should be. If we go back here, click ratings, as you can see, is a basically strong buy ratings, 4.89, which is quite high. And if you look at, they have been recommending this since December 15th. Basically, they have been saying it's a strong buy. Okay, and if we click here and go to Wall Street, we can see here it's a flat basically. Right, the next company we're looking at is Adobe, 272 billion market cap, wide economic moat. Prices right now about $600 per share. It has a PE and EPS, an earnings per share of $11.83. PE is quite high, 50 right now. Forward PE not bad for this company, 33. PEG ratio 2.2. Price to sales very expensive in terms of that, 14 right now. Profit margin, return equity, this company is absolutely amazing. Current ratio above 1, which is fine. $7.3 billion free cash flow, which is excellent. 28.6% total return in the last 10 years. They're expecting the earnings to grow by 13% this year, next year, and then 14% every year after that. Fairly valued according to this Morningstar, and $610 per share is where they think the price should be. Now if we go on here, as you can see here, Quant is actually saying a buy. It's not a strong buy, it has come down a little bit, so it was basically almost on that borderline of basically hitting towards basically that strong buy. It has come down now. If we look at Wall Street, it's actually saying is also a buy. It's not a strong buy, but although they had 19 different people saying it's actually strong buy, and when you look at the basically it's basically 8% upside from where we are right now. Now the next company we're looking at is AutoZone. This is another company that is basically a buy, not strong buy, but towards basically a strong buy, but we'll look at it as anyway. $46 billion market cap right now, narrow economic moat, $2,667 per share right now. EPS of 137, PE right now 19, forward PE is about 17, PEG ratio just below 2, which is fine. Price to sales with 2.8, profit margin 18%, return on equity is not there right now, current ratio below 1, so again I wouldn't worry too much about it because they do have some free cash flow there. Total return in the last 10 years 18%, growth estimate next year is 9%, and then 9% after that for every single year. 20% premium right now, 2,120 is where they think the price should be. If we look at it here, as you can see here, Quant is actually just a buy to heading towards that a strong buy if you like. So at some point, okay, in December it was actually strong buy, but right now it has come back to just a buy. And if we go back here, Wall Street is actually saying right now it's a buy. It's about 9% upside from where we are, and they are basically saying it's a buy. Right, moving on to the next company. This is Path, or this is one of the software companies that got up so much in 2020 and 2021. I'll show you in a second how it's done, but right now in terms of market cap, we're looking at $12.5 billion. It doesn't have any economic moat right now, or any moat right now. Price, we're looking at about $21 per share. EPS is non-existent at the moment. For that reason, there's no PE, but the forward PE is about almost 39, which is absolutely fine. 1.12 in terms of PEG ratio. So PEG ratio now kind of helps us to see if this company is undervalued, and it does seem undervalued at the moment. Price to sales is slightly high. Profit margin, of course, and return on equity is not there. Current ratio 3, basically 0.87, so there's no issues in terms of taking care of their current liabilities. Free cash flow right now is a negative. You can't expect that from this type of business. Okay, total return in the basically couple of years, for the 1 year, in fact I think this was it, was about 60%. Growth estimate for the next year, they're expecting 10%, and then growth estimate for the next 5 years about 46%, which is absolutely huge. Fairly valued at the moment, $223 per share is where they think the price should be. Now if we look at here, you can see, let me show you actually maximum. It's 70% down from this all-time high. So it was 70, almost $80 per share, and right now it's about 20. This is the reason why you have to be careful buying high growth companies, because you never know when the markets go in the opposite direction. They are the ones that suffer the most, because people don't know why they own this type of business. Okay, some people will buy this company because they've seen it trade, basically people talking about it, but they don't know exactly what the business offers. They look at this and are like, okay, what does that even mean? Okay, robotics, process automation solutions, primary in the, okay, so what does that mean? Is this company going to be in business? Is not going to be in business next couple of years? If you don't have high conviction for this type of business, it's easy to sell because everybody is selling it. Now, looking at the ratings, as you can see, is a strong buy from Quant system, and as you can see, it was a for the last, since January, they've actually changed that. Before then it was hold, before then it was a strong buy, then hold, a strong buy, and so on. So they've kind of been bullish on this business. Now, looking at Wall Street's expectations for this company, about 13% upside from where we are now. $24 per share is where they think, basically similar to what we've seen with Seeking Alpha. Now, the final company we're going to talk about today is Dropbox. Dropbox is one of the, every time I see Dropbox, I just remember university. We used to use their platform at one point just for free, just to upload all the files and whatever, instead of just saving into USBs and so on. It was quite fun at that time. But yeah, they were one of the pioneers when it comes to giving us spaces, free spaces to upload your files and then share it with your friends and whatever. Anyway, it has 11 billion market cap right now, almost 11 billion. It has no economic moat right now. Price is $31 per share, $1.56 in terms of EPS, which is good. So it does actually have a positive EPS. Current PE is about 17, which is not bad at all. And forward PE is for basically 15. Again, it's just fine. PEG ratio 1.7, not bad at all. Price to sales only 4.4. Again, I say only, but that's still a high, but it's not that bad. Profit margin 22% there right now. Return on equity is not there right now. Current ratio is absolutely fine. They have $749 million US right now in the bank if they need to use that. And remember, it's only a small company, so that's absolutely fine. 7% return. I think this is for the 5 years, it's not 10 years, so only for 5 years. Growth estimate is 5% this next year, and the 15% every year for the next 5 years. 26% premium right now according to Seeking Alpha as Morningstar. $24 per share is where they think the price should be. Now, if we look at here, it's closer to this all-time highs. I think at one point it was $39 per share in 2018. Okay, so before the whole massive bubble thing. Anyway, let's go to the ratings. As you can see here, it's a stronger buy, 4.68, and it has been a stronger buy from Seeking Alpha Quant system for quite some time. Now, looking at the Wall Street here, okay, $3.69, and it's a buy. Okay, so again, downside of about just to 1.5% from there. So as you can see, it's a buy there, and a strong buy from Quant. Now, that's the 5 companies that I want to share with you guys. You can pause the video, you can have a look at it now to see the full picture here. But like I've always said to you guys, you're gonna have to do your own research. Some of these companies are very good in terms of we understand their business, like the Adobes, for example, like AutoZone is a big company. Dropbox, we know the business, we've used it before, and Dropbox has actually have developed it slightly more, and I'm actually surprised no one actually bought this company. The owners must have loved their business, so they probably don't want to sell it. But anyway, that's the 5 companies I want to share with you guys today. Let me show you from Sharia compliance side of things. Nothing to worry about. These 2, I think here. So this one here, Dropbox, has got basically high interest bearing debt and in high interest bearing securities for these 2 here. So just pause the video, have a look at that. That comes from Zoya Sharia compliant website, or the app, if you like. Again, if you like this type of content, please join us on the Patreon account. Like I always say to you, it takes a lot of time and effort to put these videos together. Final thing I want to show you is the list. There's a long list. So this is where it comes from, Quant by stocks by Quant. And as you can see here, valuation and the value, basically here, Quant ratings is what we're looking at. And as you can see here, from there, you get all the strong buys. All the basically dark greens are strong buys. There's so many companies on that list, so I will be doing a little bit more digging, finding out some companies that I feel like are worth talking about, inshallah, moving forward. And what else do we have? So there's so many, I'm not even gonna lie to you. There you go. Now it stops from here. from here onwards is basically buy, and then you get, of course, a hold on whatever else after that. Have a wonderful day, inshallah. Assalamu alaikum. Take care.